Why most beginners lose money in options trading and how to avoid it. What if I told you that over 80% of options traders lose money? Not because they're dumb, not because they didn't try hard enough, but because they were taught the wrong game. They're chasing fast profits in a market designed to reward discipline, patience, and strategy. In this video, I'm going to break down the real reasons beginners lose money, the hidden traps nobody warns you about, and most importantly, how to avoid becoming part of that statistics. If you're serious about trading options and not just gambling, this video might save you thousands of dollars. Scene 1. The dream versus reality. Most beginners enter options trading with the same dream: turn $500 into $5,000, quit their job, trade from anywhere, and to be fair, those stories exist. But here's what you don't see: the blown accounts, the emotional stress, the silent losses. Options trading is powerful, but it's also unforgiving. And if you don't understand the game, it will take your money quickly. Scene 2. Reason 1. They treat options like gambling. This is the #1 reason beginners lose money. They treat options like lottery tickets, buying cheap out-of-the-money calls, hoping for a massive move overnight. And yes, sometimes it works, but most of the time, those options expire worthless. Here's the truth. Options are not just about direction. They're about probability, time, and volatility. When you buy options blindly, you're fighting time decay, low probability setups, market unpredictability. The fix: stop thinking like a gambler. Start thinking like a risk manager. Ask yourself before every trade, what's my probability of success? What's my max loss? What's my exit plan? Scene 3. Reason 2. They ignore time decay. Time is your biggest enemy when buying options. Every single day, your option is losing value, even if the stock doesn't move. This is called theta decay. Beginners often think, I was right about the direction, why did I still lose money? Because timing matters. You can be right and still lose. The fix: avoid very short-term expirations unless experienced. Consider selling options instead of always buying. Give your trades enough time to work. Scene 4. Reason 3. No risk management. This is where most accounts get destroyed. Beginners go all in on one trade. Why? Because they want fast results. Trader puts entire balance into one trade. Account drops 70%. One bad trade, and their account is gone. The fix: professional traders follow one simple rule: never risk more than 1-3% per trade. That means you can survive losing streaks. You stay in the game long enough to improve. Trading is not a sprint, it's a marathon. Your goal isn't to win one trade. It's to stay alive long enough to become consistent. If you're getting value from this video, do me a favor, hit the like button, subscribe for more real trading education, and comment discipline if you're serious about improving. Because most people won't do this, and that's exactly why most people fail. Scene 5. Reason 4. They don't understand volatility. Another silent killer: implied volatility, IV. Beginners buy options when IV is high, usually during hype. News headline hype, stock spikes. Trader buys option at peak. Then what happens? Even if the stock moves in their direction, they lose money. Why? Because volatility drops. This is called IV crush. The fix: avoid buying options during major hype events. Learn when IV is high versus low. Consider selling premium when IV is elevated. Scene 6. Reason 5. No strategy. Most beginners don't have a strategy. They rely on Twitter tips, YouTube signals, random guesses, notifications popping up, trader confused, switching strategies, and the result? Inconsistent outcomes. The fix: pick one strategy and master it. Covered calls, cash-secured puts, credit spreads. Consistency beats randomness. Scene 7. Reason 6. Emotional trading. Fear and greed destroy accounts. After a loss, beginners revenge trade, double their position, chase the market, heartbeat sound, fast clicking, chart moving rapidly. Trading becomes emotional instead of logical. And that's when discipline disappears. The fix: create rules and follow them. Set stop losses. Accept losses quickly. Never trade emotionally. Scene 8. Reason 7. UN realistic expectations. This might be the hardest truth. You are not going to get rich overnight. $100 to $10,000 challenge versus reality chart. Professional traders aim for consistent small gains, controlled risk, long-term growth. The fix. Shift your mindset from how fast can I grow my account to how long can I protect my capital. Scene 9. The real path to success. Here's what actually works. Risk management first, strategy second, psychology always. Focus on consistency over hype, process over profits, discipline over excitement. Scene 10. Final summary. Let's recap why beginners lose. They treat trading like gambling. They ignore time decay. They don't manage risk. They misunderstand volatility. They lack strategy. They trade emotionally. They expect fast riches. And how to avoid it? Think like a professional. Manage risk aggressively. Stay disciplined. Play the long game. If you made it this far, you're already ahead of most traders. But knowledge alone won't change your results. You need action. You need discipline. You need consistency. So here's what I want you to do next. Watch the next video in this series. Start applying one concept today and commit to improving every single week. Subscribe if you're serious about mastering options trading, because this channel isn't about hype. It's about helping you win the long game.